a new window is opening up, not only from a perspective of, hey, people are going to struggle a little bit. So therefore the stock price are going to suffer. So if you want to, on the equity side, it's a good time to kind of potentially go in. For institutional investment side, the institutional investors are big fund providers. So it's a good opportunity for them to fund a lot of these projects maybe at a low risk premium than if the markets were more hot.
Frank, how's it going?
Very good, Andy.
Yeah, thank you for joining me today. What's really interesting to me about you is your expertise in the rare earth metals and really strategic commodities. And just really, this is a very general statement, but just give us a 30,000 foot view on really where we're at as far as the supply and demand let's start with the metals, with rare earth metals.
Certainly. So when it comes to critical metals, rare earths is certainly one of them. We have to kind of take a step back and think about the needs of let's say, our economic node, I would say, here in North America, and we are competing against Europe, against China. China has been a dominant player with regards to rare earths. They produce vast majority of it. And this competition to ensure that their domestic industry is well supplied, and they use trade restrictions as a lever to ensure that the industry comes first, and then whatever's left over can come to everybody else. And they've done germanium, they've done gallium as well in the past in terms of restrictions. So in this case, still very much a China story with regards to rare earths. And we know that mining companies elsewhere are trying to drum up investment as actually developing a stable supply anchor into the Western supply chains. But that's where we are in terms of the dynamic is still very much in China's hands.
Let's talk about that and work that out a little bit more. Which you've seen all commodities. Well, I don't want to say all commodities, but most commodities have had a pretty good sell-off recently, if you would. But there seems to be this tension right now with growth in China slowing down, especially since maybe middle of the 23. What's your opinion on that? How's that impact going? And do you see China really slowing down economically, thus depressing their demand for such commodities?
It's a really good question. I think when it comes to looking at China, we have to look at them in terms of, let's say, eras or phases. So they've gone through a significant, let's say, societal uplift, both to industrialize themselves, in a breakneck speed, and also to urbanize their population significantly. So kind of starting in the late 90s, early 2000s, so when we saw the huge commodity booms. So they've lasted for a good 20 years now, and they are transitioning their economy to more a consumer-based economy, mirroring, let's say, our own in a big way. So that naturally will come with a decline in some of the base commodities demand. Still, they're a factory of the world, so there's still a huge pull. But I think that what we saw in the mid 2000s is probably not going to be repeated.
Yeah. Okay. So going on that thesis, then, do we see these commodities, for lack of a better word, are they reaching a floor here? Are companies still willing to extract them because of the price is not what it used to be? Talk to me, I guess, more on the corporate level and what companies are looking for relative to the price and the demand from places like China.
So every commodity has its own unique story. So it really depends in terms of what we're talking about. So the biggest driver right now, looking ahead, is the transition to the green age. So out of the fossil fuel age into the green age. So when we look at commodity demand for that, we certainly copper, lithium, nickel, cobalt stand out as commodities that are in particularly high demand or anticipated to be in high demand in the coming decade and 2 decades, certainly.
Okay.
So when companies are looking at investment, where to invest, how much to invest, I think there's a lot of, let's say, regulatory changes and regulatory challenges there that are starting to, let's say, clear way in terms of having a clarity in terms of what to do on a corporate level and where to do it. So just recently, the U.S. Clarified their foreign entity of concern uh, rule base rules. So much so that, let's say, by the end of this decade, so by 27, 28, 80% of the components can't be out of countries or entities that are controlled by foreign entities of concern. So that, I mean, and today, if you look at today's, the way the supply chain into these critical metals work, most of that is China dominated. So that's going to be, if the companies in the US want to take advantage of the subsidies, is going to flip around. So we'll need a lot more investment in this space. So I think activity is going, once now that the rules have been clarified and the game pieces, let's say, have been settled, the rules are becoming more well known. We're going to start seeing a lot more activity.
Okay. So from what I'm telling you is like companies are becoming a lot more interested again, because they know what they're getting themselves into.
I
If you
think
would.
that's about right. I think that's right. I think all companies recognize the demand slope, the big demand slope coming out of this transition. If we just look at, let's say, if we look at copper alone over the next, 10, 15 years, uh, with the attrition of the copper space and the amount of capital needed, we'll probably need about over $100 billion invested by the industry, close the gap. So that in itself is a huge challenge to fill the gap,
Mhm.
and it's going to act to incent prices and incent miners to go in and put shovel into the ground.
Do it. So one of the things that I've talked to a lot of people and similar that are analysts and traders and investors and that sort of thing, similar to to yourself, is a common theme that I see or hear is the electrification, and I see it of specifically North America. I'm curious, do you think, despite government rule, government goals, do you see that as a continual thing happening? And do you see that? And it's happening not only in North America, but I would say in first world countries. Do you see that trend as something that's going to continue?
It's an excellent question, Andy, and I think, let's say, here in North America, we probably don't feel it as much as maybe in Europe or China, where the electric vehicles have much higher adoption. Um, so maybe if you take a step back. So recently, COP28 concluded, and coming out of that, we've had let's say, a gross agreement with the nation participating in that to phase out fossil fuels and embrace the renewables.
Right.
Before there was the Paris Agreement, they just keep getting reinforced every year. When you say it's kind of like a first world country phenomena, it is absolutely, it is, because it's more expensive to get into this space than fossil fuels, because we had fossil fuels for almost 100 years now. So we've become really good and really efficient at doing burning energy through that kind of means. So we need to, the society is going to retool itself. It's going to be more metal intensive at the beginning, more expensive at the beginning, but over time it's going to decline both metal intensities and also cost. So when it comes to, let's say, whether this trend is going to continue, it will. Despite, let's say, the economic downturn we are facing right now, and certainly today, if you ask me, hey Frank, are you gonna, what's your next car? Is it going to be an EV? I'm first going to look at, can I actually afford an EV?
Right.
And then I'm going to say, okay, well, then I'll make a decision. But and this is not just me; it's everybody's kind of facing this call, because we're in a current environment. So you can't. It's kind of tough to look on the horizon when there's such a storm in front of you. But beyond this storm, there is this green future that our government certainly have committed ourselves to, and it's pretty hard to deviate from that kind of set path. We'll probably need a drastic political change for that to happen. Even we've seen politicians get elected on a more conservative green platform, let's call it, but as soon as they get into office, they reaffirm a lot of the commitments that the countries have gone into. And there's a reason. I think there's a reasons for that. I mean, if we, if you look at the prevailing narrative, whether it's true or not, whether you believe it or not, it's maybe not so relevant. The fact is, we as humans do impact the environment, and it's a good thing to have a less of an impact.
Sure. You mentioned something about cost of an electric vehicles, and I mean, you certainly can comment, but um, just pricing those out because they're cool, and I would like to have one. And I'm a family man, but I'm looking at the sticker price on them, and that relative to a traditional car, and I'm just scratching my head. I mean, how do people afford these?
It's a good question. I asked myself that question. So I did that. I did a cursory research. What is the ownership of a EV versus an IC, so internal combustion engine car? And there was a report earlier this year that talked about, okay, so they always talk about a 5-year ownership cost. So they say a 5-year ownership cost of an ICE car is about mid-50s, $50,000. It's still
Right.
very prohibitively expensive. Things are becoming more expensive. And
Right.
then an equivalent EV is about 65. So ownership of an EV is more expensive. And that's where the subsidy comes in. So if you ever wonder, like, where did the government come with 7,500 as the EV subsidy? It comes
That's
from
it.
that 5-year ownership. That it surprisingly bridges the gap exactly the same. So the equivalent equals the ownership cost. So the government is trying to incent us so it doesn't hurt the wallet, and it's a good thing. But I think if you take it back to um, you know certainly the demand driver is kind of mandated for now because of the cost. A lot of the countries and a lot of the states here in the US are looking to phase out the sales of IC cars. So that means maybe in 10, 15 years, we won't even have an option. And then you can imagine, even if those that own the car, they're probably going to make it more difficult for us to even refill the car, because I think we all can recognize that gas stations, the environmental footprint of a gas station in terms of the refill of the land, fixing the land is kind of expensive. So I suspect, with every carrot that comes a stick. So we're going to be, corralled into this pathway, whether we like it or not.
Yeah. Well, on the same subject, and then I want to jump to energy, but what's your favorite commodity in this space? I'm just thinking of copper. I'm thinking of nickel. I'm thinking of cobalt. I'm thinking of lithium. And I don't know what else I've missed, but yeah, what would you say you're the most optimistic about, or not even optimistic, but if you have one that you are most interested in, what
Yeah,
would that be?
great, great question. So when I look at this thing, I'm looking at it from several, let's say, perspectives. The first perspective is the ability of, well, the need of the metal itself, and why is it used and where is it used, and is there a substitute available? And then I look at, okay, if there's a need for it, what's the supply situation of it, and how easy it is for supply to respond, how expensive it is to respond. Because if you can't respond, if a metal can't come to the table and be available for its consumption, then it's either going to be substituted out, or people are going to find a way, in essence, because the market's always balanced.
Right.
So if you look at these commodities side by side, I would say the one I'm most excited about is probably lithium,
Lithium.
and there's two reasons. One being, if I look at battery chemistries, in terms of what is the one common element in every single battery, it's
Lithium.
lithium. Nickel, cobalt, is there's nickel rich batteries that's in the Tesla. There's LFP batteries, which is kind of China dominant, but increasingly so coming into North America through imports. And the LFP battery, so lithium iron phosphate, doesn't have any nickel, doesn't have any cobalt. It's much cheaper. It's not as good, but because its safety profile is better, it doesn't need as many safety bells and whistles inside the battery, so they can pack it more efficiently. So that means that the LFP battery is becoming good enough in terms of the pack level performance, not like the cell level. So the cell level is a little pouch, or the little small battery. It's no, so on that level, lithium iron phosphate batteries, the LFP batteries don't even compare to the nickel rich batteries. But but you need to use thousands of them. So on that, when you put them all in a big pack, it's because you'd have to put a lot of things to maintain the safety of a nickel-rich battery, because lithium batteries it's a bit safer. You
Yeah.
can put more of them, so you can pack them more efficiently. What the Chinese are calling this blade technology that they've kind of figured out. So I say it's good enough for its use particularly in the mass market adoption. And to your earlier point, when we look at the adoption rates of EVs into the North American market or other markets, so I think we're about 9%. So if your viewership, I'm sure you're probably familiar with the S curve of adoption, right? So we're at the early adopter stage, and certainly people that can afford and want an EV car, they've gotten it already. So now we're at a stage where it's people like us that okay, we are
Late
making our
adopters.
car. The early majority and the late adopters, right?
Right.
Because we are more price sensitive, right?
Right. We're family
To be
men.
honest, we're family people, right? We have other expenses. By the way, we are the vast majority.
Right.
So
Right.
it is this market that needs to be next, and we are the price sensitive first, and then the bells and whistles later.
Right.
So I think the cost is going to be something that the EV manufacturer is going to target heavily right now to be able to penetrate the market. So the battery and what the battery is going to be used for the mass model car is going to be the next kind of stage in terms of what the demand stage, I would say. So and when you talk about what metal I like, it's lithium because it's consistent. The only thing that could dislodge lithium is sodium ion. And sodium ion, there's some kind of challenges to it. We see it mostly being as a stationary storage application, given that it's heavier and bulkier than its lithium analogs. So for now, the way we see it's kind of lithium is the thing to stay, and the cathode side, the metal side of the battery, something that will change, and absolutely will change based on supply availability, supply risk, and also cost. Because the metal side is one. Yeah.
Yeah, then I answered that. I was going to say and you confirmed this, it seems like lithium's your favorite because of consistency and probably scalability too, I would assume.
I do. Other commodities are pretty interesting to be in. I mean, nickel certainly has always been one of the favorite ones. I mean, it was the nickel-rich batteries are good because of nickel. The challenges with nickel is its supply. I would say half the nickel comes out of Indonesia. Most of that is going straight to China for processing. So even if how much of that you can source secure for North American market is something to be kind of an unknown, I would say, which by the way opens up a lot of opportunities for, let's say, investment. I cannot understate what the new rules, how they change the game, in terms of how the supply chains will have to rejiggle it themselves to ensure not only do they meet the requirements for subsidy, but also to eliminate the potential risk. Because one of the things that that I would say, and I'm sorry, I'm just kind of
that's okay. Go ahead, please.
One of the things, if I was sitting, and I'm sure that, if I'm sitting as an OEM, either in Europe or North America, and I'm looking at my supply chain, and I have to do a hard look in terms of the geopolitical and how the geopolitics are playing a role more so now than in over the last 20 since the Cold War ended. It was very much a U.S. dominant or Western dominant space, so there was no supply chain risk as much. But now with the rise of BRICS, and BRICS is really just China, the rise of China as this third global economic pool, and the retention of the value inside of the value chain. So it's something to be said, the fact that we make cars, something to be said that we make the battery, something that we said we refine. There's always, every step of the value chain, there's a value of retention, both in jobs, in revenue, in taxation, and so on, that let's say economic centers of the world will want to play a role in this with their national champions and so on. So I don't think it's conducive to economies to give up that. And that's why there's a competition. That's why there's Europe is looking increasingly in scrutinizing EV imports out of China and their cost competitiveness, because a Chinese EV is probably half the price at the same performance than, let's say, a European EV. So China has taken the advantage over the last decade with their Belt and Road initiative to make sure that all the material, all the raw uses is flowing to China for processing and for the manufacturing of things. And then those value-add goods are exported elsewhere to compete.
Right.
And they will, and that's been a very successful model. It's a model that we had in the West for a very, very long time. So they just kind of, it's nothing new. You're just copying what we've done in the past.
Yeah, it seems like with what you said, there's really two big opportunities for, there's many opportunities, but two things that stand out is the opportunity specifically in North America to become producing again.
Yes.
Specifically where you're at in Canada. I'm down here in Atlanta, Georgia, so I don't see a whole lot of nickel. Maybe there is, but in the ground and in Georgia. But then the next point is a lot of manufacturing returning back to North America again. Because again, in the news, and God forbid, all of the wars that we have, but those disrupt the supply chains. Just in the news, just yesterday, in the past 24 hours, about the conflict in the Middle East and it impacting the oil tankers coming through the Red Sea. So it would be like, it would make sense again, returning production here, or bringing more production online here in North America, and even returning the manufacturing base here in the US and Canada.
Fully agree. And I think we're at it's an exciting time to be living through these times because so many changes are happening, and change is good. Uh, it's good because, folks like us who are watching the markets and playing in the markets, it's always opportunity. And you're right. When you mentioned, reindustrialization of North America is happening. And our government here is certainly doing a lot to facilitate this with the right, let's say, incentives and the right taxation regimes. And with the way the research are being developed, there's, like I said earlier, there's a lot of critical thinking that needs to go into and how to secure an anchor in North America, just north of the border, like where we are. I mean, it's vast open territory for mining. We've been a mining hub for much of our history, not so much of a population. We're all kind of squished down to the border with the US to keep it a bit warmer, I suppose. Um, but therein, I think, lies a huge opportunity across nickel. There's lots of lithium up north, lots of copper, lots of the metals that we need in North America and we do need that safe and secure base of supply, because without the metals, you can't build a battery. Without the battery, you don't have a car. Without a car, you don't have a market. I do fully believe that the companies of today, if they don't adapt, they will not be here tomorrow. We've seen companies that come out of nowhere, like Tesla. Suddenly they're one of the biggest games in town. But at the same time, we could see companies that had massive names, yes, today, not be here tomorrow. And this has happened with a lot of companies over the last many, many years that they disappear. And that's
Right.
because they're not adapt to the times that we're in.
If you could talk to me a little bit about uranium, and what you know and what you project about that. And the reason I ask is because obviously uh, the world gets a lot of oil from, you know, uh, which is typically an unstable or can be unstable spots in the world. So talk about risk, and building your infrastructure on oil it's become very quite risky. And I don't see, again, electricity and certainly is an answer, part of an answer to that problem, but I don't think it's the only answer to that problem. I don't see, you know, powering a country solely through electricity or batteries, if you would. Or so, talk to me a little bit about other forms of energy, specifically uranium. And the reason I bring uranium up, it is I spoke to some large investors of uranium and uranium companies recently, and they're still very optimistic about uranium, but they both told me on me talking to them that the easy money, if you would, is done, but uranium still has time to go, and they still see a good future for uranium. But you see a lot of other people have a different opinion in the sense they're wildly bullish. What's your view on uranium and also other forms of energy that could be solar and wind and that sort of thing?
So, uh, with regards to, let's talk about how we generate energy to begin with, because I think
Yeah.
that'll kind of put things into perspective. So I agree. In terms of coal, other fossil fuels, that's behind us, and it's over time is going to be phased out. Certainly, we saw in Europe a lot of these factories restart because of the situation there, but that's just temporary. Uh,
Right.
you know,
They're chopping wood down.
yeah. So, but it's just temporary, right? And we have to kind of understand the circumstances, right? But still,
Sure.
the commitment is there. Uh, so we can generate energy from hydro, which is huge here in North America. If you have the right water sources, electricity from wind farms, from solar. But those things, as we know, is not necessarily as consistent because of the sun is only a certain amount of hours during the day, and the wind may not be there. And a lot of these things, because you don't have consistent generation, you rely on energy storage to kind of keep keep that keep it advantageously generating the energy and store it and then use it. I do think that nuclear, so uranium, does have a role to play here. I know it has a bad reputation in the past, but it is a very clean source of energy. And I think that has a place, probably bigger place than today, I suspect.
Okay. So you would see that still as a very viable source of energy that
I
would
do.
be coming online in the next several years. Okay. Excellent. Any other comments? Yeah, you would make, and really specifically, we talked a lot about batteries and how would somebody, again, not asking too specific, but how would somebody construct, you know, yeah, exposure, an investor get exposure to these types of assets?
Good question. So we talk. I mentioned a bit earlier about opportunity, and we're living in interesting times. I think a new window and is opening up to build a portfolio. So it depends. There's different. Let's say I'm not sure what your viewership is. If it's mostly retail or institutional. But
Both.
let's talk both. So let's say um, the markets across all the commodities, potentially with the exception of maybe copper, are moving into surplus. So which means there's a lot more supply that's coming into the market than demand. And that means that a lot of the companies that are maybe more junior, exploratory stage, that we desperately need them 5, 6, 10 years from now, will maybe struggle a little bit over the next several years because the markets are going to surplus. Whenever markets go into surplus in near term, there's always pressure on the price. We saw lithium collapse. I mean,
Right.
the high price of lithium that we saw, it's not normal. That's just the cycle.
Speculation. Sure.
Exactly. So what I'm trying to say is that if you want to build a portfolio now, it's a good time because markets are going to surplus over the next several years. So it's good. A new window is opening up, not only from a perspective of, hey, people are going to struggle a little bit. So therefore the stock price are going to suffer. So if you want to, on the equity side, it's a good time to kind of potentially go in. For institutional investment side, the institutional investors are big fund providers. So it's a good opportunity for them to fund a lot of these projects maybe at a lower risk premium than if the markets were more hot. Um, so I think great opportunity. Not only that, but as I mentioned earlier, the theme of risk, theme of global competition to secure these resources is only going to heat up. As you mentioned earlier, we've had the Red Sea issues. We have more militarized confrontation between the powers. So that means that the U.S. will want to make sure that its companies have the right sort of materials, and that opens up a window for funding and window for companies that are in this space to supply North America to actually be in the limelight. So I think over the next several years, we're going to have a new window open up for investment. I fully believe.
Excellent. Well, on a personal level, Frank, just tell us about yourself and what got you interested in all of this, and yeah, why we're geeks on all of this.
Well, I'll tell you a little bit about myself. So I come from the mining industry. So I've been 20 years now in this sector. I'm a metallurgist by training. So coming out of school, I always loved mining and processing of metals and how it
I
all
can
comes
tell.
from a rock and into things that we use, right?
Right.
It's quite fascinating.
Mhm.
Um, And then I went into business school and I went into corporate. So doing my first kind of job in corporate after doing about 8 years of metallurgy was competitive analysis. So understanding what the competitors are doing. And I worked for Vale, so one of the majors. So I was with them for about 2 decades. And then with them, I worked quite a few different hats, from strategic planning to market intelligence to commercial operations, all kind of in managing roles. So I got to kind of see everything from ore to door, and you can't but not geek out when you see how the amount of effort folks put in terms of digging stuff out of the ground, making sure it's processed the right way to the quality that the customer needs at the other side. It's all fascinating. So that's kind of my 2 minute story. And I've just recently joined CRU, which is probably the biggest geek in the world when it comes to these commodities. We love everything when it comes from, down to the very initial junior project and what little thing they got that they love, down to and how they go from something so small down to being a huge conglomerate and putting it all together.
Got it. Well, I'll put the link to the company in the notes and everything. And just I want to thank you so much for your time. And again, you give an interesting point of view and perspective, one that typically people don't hear because there's not a whole lot of people talking about strategic metals, rare earth metals, alternative energy, and even though that's the age that we really live in and that we're going into. So, but I just want to thank you so much for your time. It's been my pleasure.
Likewise, Andy. Pleasure.
Thank you.